Hello traders, Gary Wagner here. Just before 12 noon in Honolulu, 5 o'clock in New York, markets have closed for the weekend on the shortened holiday trading period. Very, very subdued action in the equities markets, very quiet. That cannot be said for the precious metals. You can watch that report. We just got done getting that out of post-edit and online live. But as far as the Dow Jones Industrial Average goes and the rest of the equities markets, interesting mix. First of all, Dow Jones Industrial Average closing off roughly 15 points on the day, below 18,000 at 17,798.49. In terms of the range, if you look at the low, that's 17,749 and the high 830. We did have somewhat of a range today, but again, very, very subdued in terms of the marketplace itself. Now, in terms of our current trade, we are long at 2023, markets at 2090. Our stop is below 2058. Of course, 2058 represents one of the moving averages that we've been looking at. This blue line here, of course, this represents the 200-day moving average. This dotted line here, the 50-day moving average. Of course, traders that took that call, if you remember, it was the fact that we traded to this 50% moving average as the market broke below the 200 and then broke actually for just the shortest amount of time below the 50-day moving average. As this market began to trade up, this is where we actually took our cue. We got in at about 2023, so roughly right in this particular area. During the day, we saw a rally forming and coming well off of the lows, so we entered the trade right here. We have been trailing our stops up as this market has moved higher. And as I said, our stop is currently at 2058, long at 2023. Now, what is our recommendation? Obviously, with the market trading the way that it is, it was a quiet day. We'll have to see how the market wants to react on Monday. But the fact of the matter is that we have had a continuation of this rally, which began really at the beginning of October, this being after the August meltdown comes in, takes this market to a high of roughly 2020, sells back down, and then beginning of October right here, it was up and away, so to speak, because this market has genuinely not looked back. Now, we had this one nice rally that came in. That's where our fib retracement comes from. On the retracement, it broke past the 23 and also broke past the 38. So the one thing that you can see when we look at this particular chart is that the fib retracement level certainly did not give us the kind of insightful information that we got when we looked at some simple moving averages, 50-day here, 200-day here, because these have defined over time really the strength of these particular moving averages in predicting where this market's going to go. Now, we did this a little bit the other day in which we looked at, went way back historically speaking. Of course, I've got to rescale this chart as we do that. But the one thing that we can see, and let's go ahead and kind of center this and move this up a little bit so it's a little bit clearer. How big can we get it? Roughly this size. So the one thing that we can see is, especially with this 200-day moving average, when we have had this market genuinely tracking higher as it did throughout 2013, 2014, 15, and now into 2016 in just a little bit over a month, the one thing that we can see is that genuinely, except for a couple of occasions, and some of those occasions pointed out tremendous drawdowns such as here and here, other occasions just kindly touched into the area here and here. But for the better part of this entire cycle, we can see that this market genuinely traded at all times, except for a couple of corrections, really at this 200-day moving average. And when it fell and broke in August, it broke hard. So the fact that we're back above this to me is significant. And it's also really the place that we want to put our stop in, because as long as it tracks really above the 200-day moving average, we want to maintain and continue our long position in the Standard & Poor's 500. This has been Gary Wagner, wishing you as always good trading. We'll talk to you on Monday for another daily update and review. Bye-bye.